Hi, everybody. Thank you for joining me once again for Get Your Money Right with Yvonne. I'm Yvonne. How's it going? Listen, I want to start this the way we always do. I want to ask you, how are you doing? How are you faring? How's the week, the day, whatever going for you? I always want to do that because I always want to take a moment to just let you know that I'm thinking of you and wishing the best for you. And sometimes people just forget. Life is busy. Yep, I get that. But I want to take a minute to just kind of ask those questions and have you think about it. If you want to share with this community, I'll tell you at the very end, just, the listen to the video for now. But if you want to join us, we'll talk about that later. Okay, it's just very, very important to me to ask people how they're doing. We're human, and we just need to know somebody out there cares. So that's the reason why I always want to start those this way. So how's it going with me? Pretty well. I've no complaints right now. My head's down. I'm just trying to get through the end of the year. Not that I want to speed up life or anything like that, but it tends to be busier now in the fall. And happy fall to all of you. If I haven't said that, it's the year is speeding by, and just wishing good things for you. Okay. So, if you've been with me for a while, you know I like to read, money magazines, money articles, whatever, just to kind of get a feel for what I need to do and what I just want to share with all of you. And I started these earlier this year because I just couldn't find anything or anybody who spoke to me. A lot of the things that I was seeing out there were for people really and truly who had a higher net worth than I, and maybe you as well. I don't want to speak for anybody, but definitely more than me. And some of their advice was like, I really don't know if I can use that, but I can take bits and pieces from it and try to map this out for myself. And I just wanted to share two things with you. The first thing is, whatever money you are putting away for retirement, plan on it lasting you until you're 100 years old. Now, I know to say that you're sucking wind, aren't you? 100? Yes. One of our biggest fears when it comes to retirement is running out of cash. And whatever money you have, and whatever it is, don't feel badly about it. It is money that you've saved and you are preparing for, the inevitable, the retirement, and just making sure that you do all that you can, right? So whatever it is, do not feel badly about it. Now, I bring this up because I was looking at one of the articles from one of the money, I don't know if you want to call them managers, but they speak about money on a regular basis, right? And when I saw this, I was like, say what? Apparently, this particular person said, when talking about balances and how much you need in retirement, what her message was is that you need to save as much as you can, which of course we know that. But then she went on to say that $2 million is chump change. I don't know about you, but I was kind of offended by that because a lot of us, that's a lot of money. And that's a lot of hard work. That is a lot of hard saving. And to suggest that that amount is chump change, I don't have $2 million. Do you? If you started when you were younger and you had that consistent putting money into your account and you had 40 years to do it, well, you might be there, you might be over that, but a lot of us don't have that kind of money, and we have to figure out a way to create the retirement that we deserve. And less than $2 million, that's what we've got, and we're not going to feel bad about it. We are not. So don't ever feel bad. Don't accept that when somebody says that to us, because no, not having it. Sorry. No, I'm not sorry. I'm not sorry at all. Just, I don't have that kind of money. Maybe you don't either. And we're just going to do the best that we can. Okay? Hard stop. Do the best you can. And so some other things. So there's a few things I wanted to discuss with you today. And during my reading, I found something fascinating. I don't know if you knew this or you've ever heard this, but when I saw this, my mouth was hanging open because for the year 2024, I don't know if it was the Department of Labor that announced these findings or exactly where it came from, but I found it from different sources. So that's why I'm going to share it with you. So, what do you think the percentage is of Americans who make over $100,000 a year? Take a guess. Are you saying 40%? 50%? Are you saying 60 to 75% of Americans make more than $100,000? I'm going to give you a second. Time's up. Beep! Here's what I discovered. Only 18% of Americans earn more than $100,000. What do you think about that? And the reason why I say that is because it's been the holy grail. It's like, ooh, when I hit $100,000, I will just be living large. And then to see that such a small percentage of us make that kind of money. I'm sure some people are saying, well, I make that. Okay, well, what do we have? 300 million Americans. I know I'm somewhere near the right number. It's over 300 million. And I don't remember what that exact number is. But that's a lot of people. And to know that only 18% of us earn $100,000 a year or more, it kind of puts things into perspective, doesn't it? It's nice to think, when I'm making that kind of money, but when so few of us make that kind of money, that things look a little bit differently, don't they? And we know that wherever we are starting from, just know that you are doing the best that you can. Don't worry about hanging with the Joneses. Let them go on about their business. It's great for those who are making that kind of money, but are they also saving? Because whatever I'm reading about those people in that income bracket, they're spending it all. I don't want to say everybody, because obviously not everybody is doing that, but to live below your means, that's the thing. If you're making that kind of money, great. Then you should be saving a boatload. And if we're not making that kind of money, we can still have the retirement that we deserve. So just keep that in mind. There's things that we have to do to get to that point, but just know that wherever we're starting is a good place to start. Okay. And it's so funny because I'll sit with my sister and we will just kind of talk money, and for some reason she was thinking I did not have a high yield savings account, and I know why she did. Yeah. Anyway, sister conversations. So I do have a high yield savings account. I had one, but I have more than one now. But one I had at one of the banks that I do business with, and they changed their rules in that you had to have a certain balance threshold to get that interest rate and not have to pay a fee. Now, I didn't see this change. I don't look at my statements. I balance my books, and I know about what's in those accounts. And when the balance seemed off, that's when I began to do a little bit of searching, only to find out they had just started charging that $10 a month fee. And so I immediately contacted the bank, asked, what can I do? Because no, we're not having this. I closed out that account and now it's elsewhere. So when you're looking for a high yield savings account, you can look at the interest rate. That is one way to decide which way to go. And the other is there a balance threshold that you have to be at not to be charged a fee? So just make sure to check on those things. Okay, just take care of your money because nobody else is. It's all on you. The other thing I wanted to discuss with you is we talked a while ago about car insurance. So, 5 or 6 years ago, I can't remember, I was contacted by a broker and saying because of where I worked, my employer, there was a deal for car insurance. Well, it ended up being all insurance. So it was a really good deal. It was a good price. And for a while, the payments were low. I pay mine every 6 months. I write that check. Well, I pay for a different way. I don't write a check, but I pay the premiums every 6 months. It was cheaper for me to do that. And so that's what I did. And, each year it went up and up and up. And I wasn't paying attention to it. It's just like, okay, so it's gone up. All right, I will pay more. I will pay more. Then a couple of years ago, it's like, wait a minute, this is kind of getting up there. I'm stretching to be able to make that payment. And then for this year, when it went up again, I go, I'm done. Other people had contacted me, other businesses, other insurance companies, and I go, I have got to make a change because this is ridiculous. And just know this, insurance companies, they'll get you with that low amount. They'll get you through the door, and then they will raise it. They will raise it. They will raise it. And you're not paying attention. You're thinking this is what you have to pay. No, you don't. Take control of your money. Take control of your finances. And I found this. It is called officialcarinsurance.com. Just like it is, all one word, officialcarinsurance.com. And it will, when you pull that up, it will ask for your zip code, and then it will take you through the process to determine what would be a good rate for you. And just keep in mind, they want your business, so it's going to be low. So I did something similar to this. I went ahead and asked for an offer for the cars that we have, and it ended up being 1/3 the price that I had been paying. Now, what do I know? It's going to go up, and I am going to keep an eye on that, and when I have to, I will make the move again, because don't allow yourself to be overcharged for insurance, okay? I know everybody's trying to make a buck the best way they can, but you also want to check your savings, okay? So just keep that in mind. You're not stuck with whatever your insurance company says you've got to pay. Look around, take care of yourself, okay? Then the last thing that I'm hoping to discuss with all of you today is, and this is just me, remember, I don't have a finance background. I School of Hard Knocks, that was me. And I'm looking at the vehicles that we have for putting money away for retirement, and I rank them in order. I like it. You look into it for yourself and you see. But this is what I've decided. There are 4 things, okay? The first one is a Roth IRA. And I put that as number 1 because you put after-tax money into it. So you're putting your money in and it grows. And when you hit retirement, you don't pay taxes on this money at all. Keep in mind, this is post-tax money. So it is growing, and it's growing tax-free. And so to me, that's the holy grail, kind of. You can't put as much into it on an annual basis. Look it up, Google it, and see what it is for you, what the max is you can put into it. But like I said, because it's post-tax money, that for me is the number 1. Then number 2, do you have a high deductible health plan? And ask your HR department about that. And just, if you have an HSA, the health savings account, that is attached to your medical plan, then yes, you have a high deductible health plan. And the reason why I put the HSA as number 2, because you're putting money in pre-tax, okay? So you've not paid tax on this money. It grows tax-free. As long as you use it for a health related expense, you can use that tax free. Okay? And what happens once you hit 65, the age of 65, now it can function. So, in addition to those tax free options, it will function just like a 401k is. So, if you use money for a non medical expense, you can do that once you hit 65. You will just pay taxes on those funds. So, keep that in mind. So, with open enrollment coming, if you decide on a high deductible health plan and it comes with an HSA, just know whatever that max is, and there's a max for if you are have an individual health plan. There's a max if you have a family plan, and then you can do a catch up if you're, I can never remember if it's 50 or 55. Let's say 55. Look into that for yourself. Just make sure you know what the catch up age is that you can put money away. So keep that in mind. So that's my number 2. My number 3 option is the 401k. Okay, so you work with your employer to have this 401k or 403b, whatever your employer offers for retirement savings. So you're putting money in there pre-tax, so it's building and growing, and the interest is compounding. That's all tax-free. However, when you go to spend that money in retirement, that's when you're going to be taxed. Keep that in mind. So that is my number 3. Number 4, your traditional IRA. So look into all of these options and just see what works best for you. It isn't a one-size-fits-all retirement. So just look into all these options and see what works best for you. Okay? Now with that, we're going to get ready to wrap up. And I said at the beginning, if you want to become a part of this community, we would love to have you. You can just hit subscribe and become, and every time I post one of these, it will just come to your email. There is no charge for this whatsoever, like I've told folks in the past, because I wished that there had been something like this available to me decades ago. It would have been great. But you start wherever you start. And so now I'm just sharing this information with you for free. So you can utilize it. You can send the link to friends, family members, whomever. And just know that we're sharing. And I'm hoping you'll give us a thumbs up when you see this, or you will write a note to me. Everything. We're just so glad to have you, and that you're participating, that you're on this journey with me, with us. So with that, because we like to kind of keep these, seems like I'm ticking up a little bit more, but in the 15-minute range for these, and I'm a little bit over that now. So I'm going to wrap this up, and I'm looking forward to seeing you on our next edition of Get Your Money Right with Yvonne. I am Yvonne. And until next time, okay, you take care. Be good to yourselves. Bye-bye.